All right, welcome back to another limited series where we're talking to exited founders. Less than 7% of founders go on and successfully exit. In this series, we're talking about the live-learn stories of those who have, so that hopefully we can take them and apply them in our business every day. Biro, welcome to Bootstrapping to Billions. We appreciate you joining us.
Thank you for having me. To be honest, I'm on a kind of like a break from anything podcast. I've had my own 50 episodes podcast as a host, and when the request came through, I was okay. Why not? I'm passionate about my exit. I'm passionate about talking of our journey and how we got there, and also the beyond. So why not?
I love it. Thank you for joining us today. And definitely, I mean, the set is awesome. This is definitely like a perfect podcast set in terms of the background here. And I can tell that you definitely put in the reps, and we appreciate you coming out of semi-retirement to be able to get back onto this pod today. In terms of reading in the audience early and often so that we can really sink into the depth of the conversation, the heart of the conversation, what we're talking about is an exit that you were able to originally get into in late 2022, but really close in 2023, publicly announce it with Jexo. It was a software as a service company in which you started in 2018, went on and closed it out in 2022 in terms of a successful exit. You had built it to around 5,000 users or so as a software as a service company. So awesome growth, and probably learn stories for us to be able to extract from some folks at home building their own. And this is a business in which you did raise money for, and there was some corporate venture that came in. So strategic partner came in and wrote an initial kind of like seed check of $450,000, $500,000 or so to be able to get things going, which is the only capital that you took, right?
Well, a couple of things there. One, 5,000 users. I would say more like 5,000 paying accounts, paying companies, because we were B2B. So basically had around 5,000 paying customers, paying organizations from very small to larger organizations. And we actually had 2 rounds. So we had a pre-seed, seed round, corporate investment at the beginning of 2020, just before the pandemic hit. And it was like the perfect storm because we actually managed to secure the funding before the pandemic hit. And we were talking to our first investor, and it probably would have been delayed if the pandemic would have hit 1 or 2 months earlier. So we're very lucky with that. And then we had another round a year later from Atlassian themselves. It's like a loan note. And that was around 250,000 at that point.
Excellent. So a couple of things that we're going to pull out of that for sure. We'll get right into the heart of the episode. But before we do, all right, we're going to take a quick pause from the pod and talk about the new year. It's quickly upon us. It's about to be 2026, and it's a perfect time for you to pause in your business and reflect and assess. And to help you do so, we created a free assessment on bootstrapper.ai for you to be able to quickly come in and identify the risk that could potentially kill your business and then remove it before it does. The assessment is 100% free. It flows you right into the bootstrapper.ai platform. It is what we do best. It's the ability to build equity in your business, which is the ability to make a more valuable business, a business that allows you to build equity, unlock capital, so you can go on and exit with ownership, and we want to help you do so. Click and visit bootstrapper.ai, your assessment. And on the backside of it, if there's a way that we can help, we want to, you can actually book a call with a member of a long-term equity management team. See you on the other side. Back to the pod. So you did bootstrap. You bootstrapped it for a couple of years then. You were a bootstrapped founder, building this business, a B2B software. You had said 5,000 paying users. I'm curious though, just so that folks listening home can kind of put that into a framework. What was the cost basis? What was the pricing?
Well, I mean, maybe to give you a bit of a sense of what we were doing. So we had built plugins for Jira, which is a task management that Atlassian built. and these plugins would enhance the platform, uh, giving it kind of like project management superpowers, various functionality in the project management space. And we would attach a user fee on top of the Jira user fee. So if you basically if you're a company and you have 10 users using Jira and paying for them, and you pay like $7.50, let's say, per user, we might have an app that charges $1.25 per user. So when you install that app, you start paying for how many users you have uh, on in your Jira instance. And the mark was around there. We had some apps that were $2.50 per user, and then some apps that would be less than $1, depending on the functionality. But our portfolio spread across 5 apps at some point,
Mhm.
everything ranging from basically roadmap, planning, prioritization, risk management, and other types of project management functions that aren't inherit inherited by not inherit sorry inherited are not native to Jira, which is kind of like a task management, and it's known as a developers or technical teams task management tool.
In a very big way, in a very big market, huge footprint to be able to build into. One of the ways that I love to start these episodes is, I mean, this is really a finish right, start right type of conversation. So again, you're one of the few that have made it to the exit. If you make it to the exit, that means that you started somewhere. Everything starts somewhere, and you identified something successfully at the very beginning. What brought you into this? So why build on Jira? Why build this as an application? How did you identify it? Was it your own problem you're solving, somebody else's? What's the inception of the idea?
Well, honestly, I was going at it the wrong way to start with. Um, and I think that's what kept me from growing a lot of businesses in the past, which is like I wasn't talking to potential users and customers. Fundamentally, I was working for a different company in London. I was there for about 5 years, and at some point, I realized that I needed, because we were using Jira quite a lot
Mm,
to track tasks for our team. I was leading the technology team at that point, and we were doing releases quite often, and I needed a sort of release management and tracking system. And
mm,
there were a couple of big platforms out there, but it required a lot of buy-in,
mhm,
um, and a lot of time to set up and wrap your head around how these platforms force you to do release management, which
mhm,
I wasn't a fan of. So I decided to build a plugin that allowed me to do release management in Jira. And as soon as I started drawing up what I was thinking, I realized that could be very, very useful for other release managers and dev teams out there. So I started building it with the plan to launch it on the Atlassian marketplace.
mhm,
But again, the way I've done things was not to do user research and do a bit of analysis of the market and the potential customer segment and understand really what they need. I just built whatever I thought it was useful for me, um, and then put it on the marketplace. And that wasn't, we spent quite a few months, maybe 4 months, where we didn't get any traction at all. Um,
mm.
and
What
then had to
changed?
go back to the drawing board and think, okay, maybe we should do some research and figure out what exactly do people need, and amend our product to have that ability. And that's at that point everything clicked.
Yeah, let's dive deeper into that. So, quick recap. So, you were in role, another position, another business, solving your own problem. You essentially thought, okay, let me build this for myself, and then others may have it and need it. And kind of that problem was like the buy-in concept. So maybe budget was a potential thing that you were solving for, with getting approvals, and then time, being able to get to the adoption. And you're like, hey, let me put this out. And you did. And 4 months into it, the traction was low. and then you pulled back and you said, hey, maybe there's something else going on here. Let's pay attention to some of this information. Let's do something different. What was that thing that you did different? So when we actually talk about the market research, what was the change?
Well, what we started doing, and I say we because I had a co-founder that I basically started this whole business with, started looking at the Atlassian forums and understanding what users are asking for from the
Hmm.
Atlassian product team themselves in terms of features, and pretty much looking at the most upvoted features that were feature requests that were raised there for a very long time, and the product team were completely ignoring, and we decided to build it in our app. And this was still related to releases because Atlassian had in Jira, they had a releases panel that linked to tasks, but it was very basic, simplistic way. We built kind of like this roadmap timeline view for you to plot your releases and link tasks to and so on. But it was only when we started implementing the features that were super requested and popular that Atlassian development and product team were kind of ignoring, because of course they were building multiple products and they had a lot of things to do. You can't really prioritize everything.
Mm-hmm.
Um, Even if it gets a bit more popular demand type, um, but if it doesn't fit in your overall roadmap, you might not want to implement it, right? So we built a couple of features, and that started getting us traction because all of a sudden, okay, there's no way natively to get to achieve this thing related to releases in Jira, but there's a plugin out there that can do that, and that
Love
started
it.
getting us.
Yeah, so this is turning into a real boots on ground type of episode then as well, because this is like bootstrapper central. This is go and find a market that is expressing real problems someplace, whether it's like Reddit or the Atlassian actual forum where customers are sharing the things that they actually have problems with, and it's like, please help me and fix this. And you're coming in and you're paying attention to that. You're like, man, they're not necessarily moving fast enough. Let me solve these problems. Built the feature functionality into the plugin that you already had, the application you already had, and you started solving problems, which solving problems is a great way to get cash, to get customers. But how did you actually scale it? So you saw the problems taking place, but how did you ultimately connect problem to solution to then the acquisition of the customers and the users?
Well, we started implementing that and realized that that works because we started getting traction. The reason we started getting traction was because basically positioning, wording our product based on the problem statement and the problems that customers were expressing and
Mm.
features that they were asking for, and basically positioning our product using the user slash customer vocabulary when it comes
Yeah, so
to
you're
that.
almost like essentially like the product page, like the plugin page in the
Yeah,
marketplace. You're essentially optimizing like search engine optimization. You're like
yeah,
marketplace optimize engine optimization. And you're
yeah,
taking these keywords that folks are searching for and the problems that they're having, and you're plugging it out to your page. And that's driving the traction and the
yeah,
traffic
exactly.
and the
So rather
attention.
than making fancy corporate slang type of titles and descriptions and boosting your kind of like your description and all suited and booted and so on kind of landing page, actually talk talk that your customers are using, use the same vocabulary, uh, post their problems, their challenges and so on in the description, and that's the hook. That was for us the hook quite a lot, and also optimizing the page, the landing page for the product as much as possible. And then also, of course, you might do a cheeky, hey, on the threads, this is a paid product, but since the problem still exists and it's not natively there, you can use this paid product to to solve your problem. And that sometimes brought users as well, because their feedback was still unanswered. So they decided to go for the paid product to solve the problem.
Love it. Was this something that kind of just made sense to you innately to do, you and your partner? Or was this something that maybe you heard somewhere else, another podcast or something, pay it forward? Like how did you put two and two together to just know, hey, this is a strategy, this works, and then let's tactically go and execute it?
Well, it was a mix. I think finding problems to solve, basically popular challenges and popular, let's call it, needs, um, hot buttons. It was more native because we were integrated in this ecosystem of
Hmm.
the marketplace, where we were Jira users, but now we're also Jira developers. So we had access to a lot of these platforms. We knew about these support platforms, these forums, and where information is flowing in this ecosystem. So we were pretty much aware of these forums and these groups. So it wasn't it basically came natural to go, let's look through some of these forums and see what people actually are interested in. But then again, the talking the same language, using the same words, optimizing the profile, that has been a mix of us realizing certain things, but also online reading things,
Hmm.
reading books, watching various SaaS thought leaders out there talk about the right way to market and sell and
Yeah,
create
and
offers and so
hopefully some of the bootstrappers listening at home right now to this episode, they're paying attention. We have our audience is all different stages. Exit 1 is exit your day job, make your business your job, all the way to exit 5, sell your business, and then everything in between. So some folks listening right now, they're just trying to get started, and I know a great place to get started is to find a community, find some place you belong, find some place you could be authentic, or someplace you're just interested, right? Where's your passion, your pursuit, someplace that you can hopefully pay attention to some of the problems that folks are existing, and hopefully be able to be a solution to it. And that's a great place to be able to start. Everything starts, and then for some folks it doesn't continue. For you, it did. You had 4 years where you're building this business. Once you kind of found that problem and you found the path to customer and the path to traction, then there was a moment in time where it was, hey, maybe we're going to pursue an exit. I'm curious, like, how did that actually come about? Was it something that came out of you and your partner's brain? Did you guys incept it? Did somebody come and put it into your brain and incept it for you? Like, what's the story behind the exit?
well, the story is a tiny bit more long-winded, because when we built the first product and then used this whole strategy to help get popularity and get users, and when we got our first investment, we were making already $5,000 monthly recurring revenue, and that took us from summer 2018 to um, November, something like that, 2018.
20,
So it's like quite
2020.
fast to get from few hundreds of dollars per month to this, to 5,000. And when we realized that we can that there's a secret formula, a secret recipe here to allow us to grow this product, we had a moment in time where we thought, should we continue to just build this product, this plugin, or should we slightly de-risk our business and basically put our eggs in multiple baskets rather than
Mm,
one basket? Um, and we decided to do that. And because we had this tactic of growing, we were able to launch multiple products, and this time based on the community, the user community needs, rather than saying, hey, here's a great idea, because that's what a lot of us that have this attitude towards, we're entrepreneurial, we have ideas, we're creative, and come up with ideas and start building it without even validating the market. Whereas post the first product, we actually, the other products we started building straight up by understanding what the community had a need for. So the other products, as a result, actually grew a lot faster than even the first product.
Oh,
So
interesting. And you had said 5 earlier.
yeah,
So this
yeah,
was
yeah.
5. So you ended up adding on additional 4 more applications onto the core. And
Yeah.
were they unique, or did you cross-pollinate, cross-sell? How did you approach building the portfolio?
They were unique when we got acquired. We're at the point of building kind of like cross sell strategies, but
Mhm.
they're all unique, paid separately. You would install them separately into your Jira. So, for example, the our release management tool eventually became a roadmap tool. But the second app was a prioritization tool, was called Foxley. We also had animal names and origami team for all of our products. The first one was Swanley. The second one was Foxley prioritization tool, and that came out of just understanding that the product management software sphere, they all had some sort of task prioritization a solution. Jira didn't, so it was really well timed for us to launch that product. For that product, we looked inside in our Atlassian Jira community, but also outside of what the trends were with separate bigger products on product, and that skyrocketed really fast. That was our most popular product. And risk management, same approach. Even looking at, okay, so what tools to launch? Well, let's analyze and figure out what are the biggest asks from the community and build those tools. And that was pretty much this long-winded part that just ended. Um, it made us think, well, we can scale this quite significantly. um, it doesn't have to be a small us and 1 2 developers type of team. We can actually grow it and we can sell it eventually. Um,
Okay, so
and
it came organically from
yeah,
you and your partner of, "Hey, we found something that works," which for a lot of entrepreneurs, especially bootstrappers out there, the hardest part is kind of finding the thing that works. So you were able to find the thing that works, and then uh you were in tune enough to just do more of it. And that's a big place where a lot of folks fail. It's find the thing that works, and then it's the next shiny object or something different. But it's like, find the thing that works, just do more of it, let that thing work more. And that's the the additional applications in which you were able to build. You kept the model even to the point of the animals and the origami, and like almost building a micro brand within it, so that you have the continuity. It seems like, yeah, it's just like, let's not change anything. And then the idea became, hey, let's just keep doing more of this to the point of actually manufacturing an exit. And that was really, so that was the thought process. It was like, let's keep building this until, and then how did you set the goal? So like, what became the thought process towards achieving that goal of an exit?
well, we we kind of set ourselves a target in terms of at what size and basically company valuation we would sell. And we started issuing also basically stock options to our team. And I think was one of the greatest things that we've done, was a lot of transparency. So every single quarter we would share with the team the MRR, ARR growth, and how we're heading towards our goals, to down to um, based on the company valuation, roughly how much their stock would be worth at that point. Which I know that a lot of companies kind of like shy away from doing, which I'm not saying is a good or a bad thing. Um, but for us, we are pretty open and sharing that. It can be, it can also be a downside and a bad thing, because we might have raise hopes of people being like, "Oh, look how much my stock is valued right now. Stock options is valued right now. That's great. I'm rich. I can retire," and so on. And you wind up selling for a lot less, and people get disappointed and so on. But luckily for us, we had a goal. I would say we didn't achieve the goal. We sold kind of like at half of our goal.
Mm.
But now looking back, it was, we'll probably talk about this. It was a great decision. Um, but also the team was super happy with where we are, because anyways, whether it was that goal or what we wind up selling for, very similar, as in very similar, sorry, not very similar, I mean still a lot of gain, and a good bonus for everyone in a
It
sense.
was a win. And
Yeah.
I think that there's a lot to unpack here. I'd like to invest the time because this is unique. This is the first time on one of these limited series exited conversations. We're talking to somebody who quite literally decided to manufacture an exit. And in deciding to manufacture an exit, leaned on skin in the game transparency with the team. And it said, hey, let's set a goal line. Let's actually put it out there. And then let's get everybody on the same page. And let's get on everybody on the same page to the degree of let's show you what it would be worth if we achieve this. And that's unique and that's interesting because we haven't had somebody that has done that yet.
Well,
And
I would
I'm
say
curious, like, what moment in time was that? So was that 2020? Was that 2021? Was that like at the Elysian debenture investment? Was that post just closing the capital? Like, when did you start to shift towards, hey, let's manufacture the exit?
well, first of all, I would say it's not a bad thing to start a business and want to have an exit from it. Like there's a bit of this stigma of, oh, well, I'm building a business because I'm passionate about this industry and I need to present myself as that, as being here for the long run and so on. Yeah, that's great. Like we're passionate about what we do as well. We're passionate about our team. We're passionate about our customers and so on. But ultimately, we all have different goals and different reasons on
Hmm.
to why we build a business. Yeah, some investors might frown upon you saying, well, I'm building this and I want to exit in 2 3 years, 5 years for this. But a lot of them don't. We're in an age where everyone's building something and then selling it, getting acquired and things like that. So it's normal. And I would say and I keep on saying to early founders, just figure out your why
Hmm.
and just embrace that. Even if that why is, well, in 3 years, 4 years from now, I want to be good financially and be able to settle down, get married, to get a house and two dogs and so on. That's a pretty good reason,
Yeah, I
right?
mean, we all have a reason. It's like you have the personal why or like the intrinsic why, the purpose-driven why, but then you have this other thing on the right side, which is like a real financial reality, right? That we all have to live within. And if you could figure out them both, but at the end of the day, money kind of does matter to a certain extent. And then you ultimately manufacture the exit in which you want. We all exit. It's just it's a matter of time, right? We all eventually exit at some point, so it's good to be able to determine which exit you want. At what moment in time did you decide though? So when you made this decision of, hey, we're going to start to manufacture towards this goal line, like when was that? How far in? And then how long did it take you from that moment to then say, okay, let's actually pull the trigger in 2020, in 2022?
We started building our second product in 2020, summer 2020. And yeah, we realized about then that this is a repeatable
Oh,
process and that
gotcha.
we could launch a lot of products like this. And if we can make an X amount of annual recurring revenue for each of these products on average, that we could get to a number that will allow us to value the company, an ARR overall a number that will allow us to value the company at a number that would be pretty great.
Hmm.
And it was a mix of, and is basically in the second half of 2022 when we decided. And it was a mix of that, realizing that we have something powerful, but also my partner and I realizing that we want to, like, I'm an immigrant in UK. I've been living off rent, not owning much, since 2011 when I moved to UK. Um, at that point, I was turning 35, and I really wanted, both me and my partner wanted to finally settle down, get a house, have a more comfortable and relaxed life.
Hmm.
I've also worked my entire adulthood really hard trying to make businesses work, trying to become an entrepreneur, um, do certain things with my day job when I had a day job, and so on. So it was at a stage where I wanted to get to put the brakes a bit on at some point in the future and relax and basically re-energize. I was feeling that eventually there will be a time where I'll be burnt down completely just running this fast all the time.
Yeah.
So it was a personal decision, I would say, because of the current state of things at that point. Wanted to secure our future in a
For
sense.
sure. Without a doubt, which is extremely important. And then you did, and you got into this moment in time where the exit became a very real thing. So you conceptualized it, then you pursued it, and then you started to actualize it. I'm curious of the process. So when you're actually going to the process, um, did the buyer come to you? Did you find the buyer? Did you have multiple buyers? Did you manufacture a process? What was the actual exit experience like?
Well, it's actually very, very organic, and that's the other thing that I talk about all the time is even if you have a goal, a very well established goal in your mind, like we did, we didn't force things. I didn't go around chasing um, inflating numbers in terms of revenue or making friends for a benefit or talking about selling the company to individuals that I didn't really understand or knew much about. So we carried on with building our business, building our brand as well. We were doing quite well in terms of content, brand building, content. Became quite popular in the world that we were with our brand, and both me and my co-founders names and faces, and started making friends pretty much in the ecosystem. um, and it was a very powerful and important moment to be able to pick up the phone and call any brand, any company in this space, no matter how big, including Atlassian themselves, and get them to pay attention to us and get involved in certain things. And I'll give you one example. We organized at some point, I think it was summer 2022. We organized a 72 hours live stream talking about project management, um, and we were doing it for charity.
I love it.
And we were able, because our brand was so popular at that point, we were able to bring in so many speakers and get so many brands involved. And we raised over $50,000 for the Malala Fund, and had uh, over 50 speakers and brands and companies in this world and individuals involved in this live stream. So that was a huge statement of how big and I would say notorious our brand became in the space.
Yeah, I mean,
And yeah,
it's not easy to pull something like that off for folks listening at home, to be able to connect the dots for them. That's a lot of moving parts. It's a lot of moving parts to be able to not only execute, but also to influence and be able to have
yeah,
enough folks that would say, "Hey, yeah, I'll get behind that and be a part of that." And make them like an actual existing moment in time happen, which is amazing. And you essentially then pulled from this ecosystem of relationships that you've been able to both build in, because you literally found an ecosystem to solve problems and build within. And your entire business is built within an ecosystem, which is amazing, a micro community to a certain extent. You invested back into it. You also gave back through it, which is
yeah.
amazing. And then when it came time to find the buyers for it, was that as simple as that? Did you just pick up the phone and call some relationships you had? Or how did you go about creating the process?
So we were friends with a lot of people in bigger organizations, that were already known for acquiring smaller companies. Um, we didn't have to ask for it. We were already been hinted and also messaged about, hey, we love what you guys do. We love
Ah,
the products
yeah, so people were
collections
coming
that
to you
that
and
you
planting
create.
the
Yeah,
seed originally.
we love the product collections that you launched. They're doing really well, but also we love you guys. We love the branding and the content glossary that you created. And we were very, I think the other thing is we weren't just, hey, we're good at product and we have some successful products, but we were good at content and we built brand with content. Video content, we had events that were running that were getting popular, and video content that was getting thousands and tens of thousands of views on YouTube. We had a blog that was growing quite fast to a point we had like 15,000 readers per month reading our blog and so on. So there was a lot of moving parts that we were quite successful at, and that made us a really good, appealing, well-rounded company, product company.
Yeah, no, with defensibility built in. And when you're looking at that moment in time, if you were to reflect back, I know it's been a number of years, right? You're on to new things today. So I want to cover with the time that we have a reflection of that exact moment when you were selling, perhaps any hair on the deal or any red flags or moments of anxiety that you remember going through, like the actual process for folks that are listening at home that are maybe planning for this in the coming years ahead. What were the moments in time of the process of exiting that you wish that you knew in advance? If hindsight's 2020, and then also the post exit experience.
Well, the one thing that I would say that's the first thing that comes into my head is thinking that this will be a no stress, no complexity type of deal, because our company was pretty simple. We didn't had a huge team. We didn't had complex structures in terms of revenue and customers and so on. It was a pretty simple setup. First, most importantly, being in the market like this, we didn't actually had multiple customers. We had one customer, which was Atlassian, because they were the reseller, they were the middleman as the marketplace. So we were actually selling all of our licenses to Atlassian, and Atlassian was selling it to these customers. So yes, we had customers, 5,000 customers, but
Mhm.
actually there were 5,000 licenses that were bought by Atlassian to give to these customers. So even from a logistics, legal, financial point of view, it wasn't a lot of cross checks, because it was basically, hey, Atlassian keeps on buying these licenses from us, so they're our only customer, right?
Mhm.
Officially. um, and because of how simple our business, we didn't had any uh, revenue split, partnerships with other companies, or anything like that to complicate the setup. I thought it's going to be a walk in the park. Um, our buyer also said it's going to be a walk in the park, and we're going to be done in 3 months. It took a lot longer than 3 months,
How long?
and that was a kind of like an eye-opening moment to me, that it doesn't matter how simple a business is. There's probably going to be a lot of back and forths, and some T's and dots that need to be crossed off the list. And even if they don't make sense, they still have to be crossed. And I think that's one of the other thing is, um, when it comes to corporate acquisitions and so on, you will have lawyers and an entire team that's going to look at certain things. Not everyone understands the mechanics of your business, so you're probably going to go through a lot of lists of kind of like answering questions and satisfying a certain type of information need in order for the acquisition to happen. And you might look like at those questions and think, this makes absolutely no sense for my business. And you have to be very hey, yes, no, this doesn't apply to us because of XYZ, right? So it took a lot longer. I would say that was the most unexpected, because in
How
my
long did
mind,
it take you? What was what was the length of the process
I
for
think
you?
it was close to 6 months.
Double.
So yeah, double the time.
Measure
Yeah.
twice, cut once. Double
And
double the
that's
markup.
very frustrating, and
Yeah.
that's the other thing which I didn't realize that's gonna hit me, like a hard punch, is the emotion, the ups and down roller
Mm,
coaster emotions of doing that. Because if I describe how it feels, is like you're waiting for the exam's results while you're still taking the exam, because it's right. So someone's asking you a bunch of questions and drilling you about your business in that, I would say, in that period after you sign the, kind of like you're in the exclusivity
mhm.
moment.
LOI,
There's
yep.
intent, and the buyer has agreed to buy the company for that specified amount, but you have to go through the due diligence period where you're under NDA and exclusivity, and that period of 3 6 months where you're basically getting drilled on all of these questions, and you have to deal with lawyers and corporate and finance people and all of these
While
different,
keeping the business going still.
while keeping the business going. You have to answer all of this, and also hoping just like that everything goes well and you're able to sell. So it is like giving an exam, and also kind of like having your heart in your throat, thinking of the result of the exam, right? So
It
that's has been a very, yeah,
I
it's
like
been a
that
roller.
analogy a lot. That's the first time I heard it. If you could go back and give a cheat sheet to anybody listening at home right now, what would be the little cheat sheet that you would slide them
Well,
going into that exam?
the cheat sheet would be, as I mentioned, like just having a as simple of a setup as possible. So, like, if you're thinking of getting acquired, selling the business at some point, you have to think about what you need to hand over and what you need to explain to a buyer about your business. And if there's any part of your business that's very hard to explain, that's going to be a point of contention,
Mm.
with the acquisition.
So
And it may
everything for
be
the
a point,
transfer and the integration of the asset
yeah,
post
it
close,
may
like
be a
get
point of
proactive.
contention that's also impacting your valuation or the offer at some point, right? Because if you have some parts that are kind of, questionable within your business, that might create a bigger risk for the buyer, and they might want to, lower the offer in a sense.
How was that
So,
experience for you? Was with a back and forth in terms of price and terms? Did price and terms change throughout the
we
experience?
had very, very little back and forth in terms of the pricing. There was a lot of work once we sealed the amount and the rough, deal, information. So, like, this is what everyone's gonna get. This is the transition. This is what the roles of the teams are gonna be. This is what salary you're getting as part of acquired, employees, and so on. Um, so all of that. By the way, you froze for a second. You still there?
Yeah, you're good on my side. You're
Okay.
good on my side.
Mm, so the part of the negotiation, the pricing wasn't that long. The longest part was the due diligence piece. Um, and I would say the one takeaway that I would want people to understand that I didn't do is put the terms, define the terms better
Mm,
before
mm.
you sign exclusivity and you get into the due diligence part,
Yeah.
because there can be things that are misinterpreted in the terms.
Mm.
So if you're getting acquired, you know, figure out better and word better with the buyer on what your role in the company will be and what your salary and what your benefits will be. Get that done better in that due diligence if that's important to you. If you don't care, if you just care for, the exit money, and you don't care what kind of role you get in, or even if you're staying in the buyer company, then that's not important. But make sure that you have as well defined, with the help of a lawyer or a corporate advisor. Um, make sure that you define those terms properly. I think the biggest cheat sheet, if I were to give you a cheat sheet,
Yeah.
is don't do it alone. And I don't even mean a a lawyer, a corporate lawyer, but get a corporate advisor, basically exit advisor, that can help you navigate that whole process. And yes, you will have to give them a small percentage of your deal exit and so on. But trust me, you want that,
It's worth
because
it in the end.
even if you know the buyer and you're friends with them, at the end of the day, they will, especially if they're a bigger company and acquiring companies like this, they will have corporate advisors and lawyers on their end as well,
Hmm.
which would want their best interest. Of course, they're there to soften the deal as well. And even if if you're friends and you get along really well, make sure that there's no um, heavy points of frictions when it comes to the deal. And they might back the aggressiveness of the corporate advisors and lawyers a bit,
Soften the blow.
but
Yeah.
they will always listen to the advice that they give, because they have a big business to run and continue to acquire businesses and such.
And a
So you
fiduciary
have to have that as
responsibility.
well.
Absolutely.
So you have to have a corporate advisor as well. Otherwise, you might wind up taking a deal that you regret later on, or not even realize what kind of deal you were taking.
The cost, yeah, the cost of not upfront could be greater. Tremendous boots on ground experience and feedback. So tremendous in terms of the audience listening to be able to pull that out and be able to apply it forward. If you were to reflect back, like what range would you say that you ended up investing in terms of getting that support to be able to close the deal successfully?
Uh, yeah, I can't really say that publicly, because it was across basically a corporate advisor and a corporate lawyer.
Mhm.
And if I give a range, like my exit's gonna eventually be public and so on,
Oh,
so I don't
gotcha,
want
gotcha. Yeah, people
like
put
say, oh
5%,
well, corporate
10%,
advice. Yeah. So
under
yeah, right.
10%.
Yeah.
Take it. And then everything happens, right? You have this moment in time that's anxiety driven. It's a test that you're taking. You don't know if you're going to pass, and then all of a sudden you do. And 6 months in, you get the final results, and it's an A. The deal gets closed. Like take the audience through that moment. How did that feel? Can you reflect back the exact moment when you realized that everything hit? Do you have a little bit of a story around that?
Yeah, well, it was intense and frustrating, because not frustrating, stressful, I would say, because um we had a date to sign and close. Um that date got pushed once, and then it pushed again, and then a day before the close it was pushed by one day, because there's more people to sign and so on. But once we managed to everyone signed, and our lawyer messaged us, it's done, it's signed, everyone signed, it's a done deal. Now we have to wait for the transfer to the first tranche of the money to hit the lawyer's account, and then the lawyer to basically send it to all the parties and so on. Um, yeah, and it was stressful, but it was a sigh of relief when everyone signed. It still didn't feel real. Um, I thought that maybe money's never gonna come or something
They
like
were going to
that.
push again. Yeah.
When you go through a complex process like this, where there's roadblocks and speed bumps and so on at every single day, month, and so on, and you have to go so much back and forth in the due diligence process, at some point you just start thinking that maybe this is not real. Maybe it's just a bad dream. So that's how it was for me. And eventually when in a couple of days when the first transfer hit, I'm just staring at my phone at the bank account and still like thinking that this is the most money I've seen in my account ever by a lot. And there was just a moment of I would say peace and tranquility, thinking of
Hmm.
finally got there. It's done. Now I know that it's done.
Yeah.
And to be honest, that whole acquisition process was probably the hardest thing that I've ever had to go through emotionally, um, throughout the existence of the business. You know, we've had some ups and downs and some moments of stress and panic with the business that this happened. Atlassian themselves implemented this feature in Jira that now competes with our own product, but it's integrated, so the user doesn't have to pay extra. Why would they pay for it? So there's a lot of moments of strategy, shifting and pivoting and panic and so on. None as stressful as the exit. So I would say that that's a big um, kind of like word of caution to everyone that it's not easy. It's not like when you find the match for you when it comes to an acquisition of a business to buy your business. It's not all roses and
Yeah,
rainbows
it's a,
from now on. Yay, we've done it. We find someone they really want us. Yes, but the next period to getting to actually getting acquired and seeing the money hit your bank account and having done the whole thing, has been the most stressful period of my entire life. And I think people don't realize this: when you're raising money and when you're selling the company, it's basically a full-time job and it's very stressful. It's not like, oh, my main business is this, but yes, yeah, well, at one point we'll raise money. That's fine. That's fine. At one point we'll sell. That's fine. Like it requires time and effort.
Mhm.
And honestly, the amount of tasks that I unloaded on the corporate advisor team that we hired, so that I can continue to run my business, it was insane. Like, again, it's a full-time business and it can be emotionally draining.
I did. This has been a absolutely phenomenal episode. You have shared so much lived, learned knowledge and experience, which is by far the most valuable because there's only a handful of folks that actually have it. And you were able to pass that and pay it forward today on today's episode. Everything's a moment in time. The exit passed. You're now onto something new. I was hoping that we could wrap it up with talking about what it is that you're doing today post exit, and perhaps also for the folks listening, where they can maybe get in touch with you.
Yeah, so currently I'm running multiple businesses. I have a company called Masterwork Media, and we're a media company producing TV shows, series, game shows, dating shows, and so on. We're just at the beginning. Been running Masterwork for a while, but we transitioned from being a film production company into a virtual production studio, and now we are a virtual production studio. We basically have a green screen and do real time compositing with 3D worlds. We can basically put people anywhere in the world, and I'm taking advantage of this technology and building shows for YouTube, and streaming services, and being able to just have tens of shows shot from this studio, and every single show have its own branding and its own uniqueness in the studio. So this is one. With that, we also launched a product called Patch Panel that helps you manage your studio cables. Again, building a product out of a need, but also
Mhm.
out of understanding the community and the world that I'm in. And I'm also on the brink of launching an influencer marketing business, which I can't give too much details about just yet because it's going to be launched in the next couple of months. I'm also an investor. I invest in companies, co-founding companies all the time. And probably the best way to reach out is on my LinkedIn, on Biro Florin. You definitely find me there, or Instagram.
Love it. And every exit or every end is just another beginning. And we appreciate you joining us today. Till next time, trust the process, commit to the journey.
Amazing. Thank you for having me. I appreciate it.